Hey guys, Alec here. In this video, we're going to be going over the Florida insurance crisis and how it's going to affect the real estate market. We're going to be going into four subtopics here. The first is rents are going to go up. The second is it's going to decrease the amount of property homebuyers can purchase, and it's going to potentially decrease prices. And we're going to go over the amount of retail investors going down. So let's dive into the increase in rents here. Why does insurance prices going up lead to an increase in rents? Well, let me tell you, it goes to an increase in rents because for the property owner, they have to pay more every month to keep the property insured. And they can't lose money on the property because if they stop making their loan payments, the bank is going to take that property back, right? So the owner of the property still has payments. But basically, your rent payment would flow through the owner of the property and then go to the bank, right? So if the insurance rates go up, the owner of the property is going to have to increase the rents because they have to cover that expense now. So it always flows down to the end user, right? So it's going to be an increase in rents. There's not a question because otherwise these property owners can't hold their rents. And not everybody's going to move out of Florida. So rents only have one way to go, and that's up. They say that rents tend to double every 10 years. So that's a metric to kind of keep your eye on here. But rents are going to go up. So then we're going to see a decrease in the amount of property buyers qualify for. Because let's say somebody makes $75,000, right? That $75,000 qualifies them to purchase a property. But now if insurance goes up, the property payment is more expensive on the same property. Therefore, they can afford less of a property. If you were buying a $400,000 property and your insurance was, let's say, $200 a month, but now it's getting increased to $300 a month, that same person can no longer qualify to purchase that $300,000 or $400,000 property. The qualifying amount goes down because the property is more expensive to upkeep and hold. The third thing, prices. Are they going to go down? Theoretically, prices should go down based on the insurance prices going up. But the world isn't that easy, and it doesn't always react the way you think it's going to. There's a lot of outside factors such as real estate funds with trillions and billions of dollars that are buying a lot of single family homes. And that's putting a lot of pressure on the market. And it's actually taking the average person and removing them from the market completely. So with those funds buying all these properties, even though insurance prices are increasing, those funds buying those properties supersedes the increase in insurance. And therefore, I don't believe we're going to see a decrease in pricing. We're still going to continue to see an increase in pricing, even though insurance rates are going up. Everybody's buying real estate. The tax advantages in real estate are crazy. So real estate prices, I believe, in Florida are still going to go up. The amount of retail investors, so there's institutional investors, which I talked about, which are like the funds. They have billions and trillions and hundreds of millions of dollars. And then there's retail investors that have maybe 1, 2, 3, 4 properties. Maybe they have a 20-unit building, but they don't make millions and millions and millions of dollars. They make a decent amount of money that they then decide to put in real estate, right? So all these funds coming and buying these properties while insurance rates are going up, prices are still continuing to rise. That decreases the amount of investors, retail investors, that can purchase property because they don't make as much money. They don't make enough money to buy a ton of property. So it gets them in a pickle. So retail investors are going to stop investing in property because it's not going to make sense for them to own that property anymore, just because insurance rates are going up, prices are going up, taxes go up every year. So it's like they're dropping off. So the big things to take away here from this insurance increase is rents are going to go up. You can't buy as expensive as a property as you could have if insurance rates stayed the same. The qualifying amount that you qualify for is less now because insurance is more expensive. So if you could buy a $400,000 home before, maybe now you can only buy a $380,000 home. And that's just going to continue to go down and down and down. Prices, are they going to go down? Don't think so. Think they're going to go up with all the things going on in this market. The amount of retail investors is going to go down though, because retail investors cannot afford to hold properties where insurance is super expensive and they don't make enough money to buy a ton of properties, but the institutional investors do. So we got rents up. We have a decrease in the amount you qualify for as a buyer. We have prices going up, and we have retail investors going down. So that's the consensus based on these insurance rate increases. Hopefully this video was insightful and helpful.